We want to bring in Tim Higgins, Wall Street Journal reporter and a CNBC contributor. In his latest column, Tim says that regardless of the strike's outcome, Elon Musk has already won. And Tim, thanks for being here. That may be a little self-descriptionary, easy to understand from all of this. Elon Musk is not dealing with unions in the same way. He doesn't have any unions.
Yeah, he's not at the table, but he's definitely, his presence is kind of looming over. It gets down to the labor costs. The UAW workers at these Detroit automakers, on average, all in is about $66 an hour. That includes benefits. At Tesla, it's estimated at $45 an hour. So from day one, when they start talking about spending more, Elon wins because Tesla is cheaper to make cars over there for those electric vehicles. And it's not just cheaper; it's also they're working to cut costs even more in the future. They've already talked about slashing manufacturing costs by like 50% for the next generation vehicle. So, the UAW would probably say it's a race to the bottom, but it is a race to make electric vehicles profitable, and Tesla is doing that, whereas the likes of Ford are not.
As the UAW strike against the big three auto manufacturers continues into its seventh day, there has been a talking point developing in the media where Tesla will emerge not only as the winner in the car world, regardless of the strike's resolution, but also how Tesla differentiates itself amongst the players in its own sector. We as shareholders might see Tesla as a behemoth with its tendrils spreading wide throughout the economy, dipping into the automotive manufacturing sector, robotics, software, artificial intelligence, energy storage, energy generation, and vehicle charging. Even with the stock price well off its all-time highs, Tesla sits at a market capitalization of $800 billion, which is over 5 times the value of the big three combined, and stands as one of the most innovative companies in the world. I don't have to tell you all the superlatives of Tesla. If you're like me and you have all your money invested in the company and know everything that happens Tesla related the minute it breaks as a story, the point I'm getting at is, even from the outside looking in, Tesla looks to be like a well-matured company. In reality, many of you and even myself can argue their journey is very young. The company moves fast as a startup, looking to ship product constantly, update quickly, and has an employee base who benefits directly from its success. How Tesla separates from the pack in not just the automotive sense, but from a large corporate sense, is how their employees are compensated by the ability to receive equity awards, typically in the form of stock options, and to be clear, that is stock options from a growth company. This would greatly differ from how members of the UAW would be compensated by the companies they work for, which typically takes form as a profit-sharing bonus. So why the difference? As a Tesla stockholder, it's pretty obvious. If I ask you to choose from an equal dollar amount of Tesla stock or Ford stock, what might you pick? I'm sure someone out there will point to the volatility of Tesla shares and the fact it's off its all-time highs, but Ford is no different. Matter of fact, if you were to receive Ford stock 1 year ago, you'd be in the red by a few percent. 5 years ago, you'd be green a little bit by 23%, but 10 years ago, you'd be down 30%. Over the past 5 years, Tesla stock increased 1,300%. 10 years ago, try 2,300%. The picture I'm trying to draw for you is that the UAW and its members aren't interested in receiving stock-based compensation from legacy automotive companies. It's basically the same reason why investors don't value those stocks with higher multiples, with Ford floating around a price-to-earnings ratio of 5 to 6, with Tesla, on the other hand, being 70 plus. Which brings us to the importance of Tesla's work on artificial intelligence and, in turn, full self-driving and autonomy. Let's listen to some Tesla bulls who spoke recently about how Tesla's lofty future valuation is based on achieving that singularity.
Bear case for Tesla is $1,400 a share. Guy here said he'd take $1,400 because that's still pretty bullish. What is in, let's just even say, the bear case? What assumptions are made about its business to get to that $1,400 by 27 number?
Well, about a third of our valuation is associated with electric vehicles, EVs, and scaling them. And then 2/3 of our valuation is around autonomous and autonomous taxi platforms. We think Tesla is in the pole position here in the United States. It has collected more data about our roads and actually other roads around the world than all of the other companies combined, and therefore it has more corner cases.
Yes.
And
again, take that $5 a share Tesla's supposed to earn next year, divided by 0.1. That's 10%, which is a good cost of capital assumption for most companies, most large companies. And you get to a stock price of $50. Now, that's interesting because Tesla trades for $250. So we know that 20% of Tesla's valuation is driven by what's happening right now, or the near future. And 80% is what's going to happen over the very long term. And that's a pretty big number. To give you a little bit of perspective, Apple trades for 40% current value and 60% future value. Basically, it's going to earn $7 a share next year. Divide that by 0.1, you get $70. Stock trades for $180, 40%, 60% current and future earnings potential. GM, just to give you an auto stock comparison, is also going to earn $7 a share next year, according to Wall Street. Also worth $70. However, the stock trades for $35. So GM trades for half of its present value, meaning what it can earn, what it should be worth if it can earn $70 forever. And that tells you the market is kind of skeptical about GM's long-term potential. The market's saying, look, best case, GM can earn half of that $7 over the long term, that $35 per share stock price. And by both of these measures, Tesla is probably pretty fairly valued here, because on the case of GM versus Tesla, GM may not make it over the next 20 years. The transition to EVs is going to be super hard for the global auto industry, and really going to crush margins and cause a lot of very expensive R&D to be spent, even if companies don't actually get to the other side. Tesla's already done that work, doesn't have any internal combustion engine vehicle products, and so it doesn't have to worry about that. Tesla will make it, GM may not. On the Apple versus Tesla side, Apple's got a lower valuation on future growth, 60% versus the 80% in Tesla stock. And that's probably fair as well, because Apple's a juggernaut, obviously, but it may not grow as fast. It doesn't really create a lot of brand new products the way Tesla has over the last decade with EVs. And so by both of these measures, Tesla looks pretty fairly valued, not too expensive, not too cheap. Let's move on to the third way, and that is to discuss that 80% of Tesla's valuation that's driven by expectations for future growth. What causes that? Because it can't be EVs. Making cars is not all that profitable, and making EVs will not be structurally a lot more profitable than internal combustion engine vehicles. It's still a complex, very difficult product to build, and global capacity being what it is, car companies don't make a lot of money. Now, even Elon Musk has said this. He has said, look, the value of Tesla is not in making the cars. The value of Tesla is in autonomous driving, where you don't need somebody driving and paying attention 100% of the time in order to get a vehicle from point A to point B. And he's absolutely right. The question is, what is that worth? Now, global GDP is about $100 trillion this year. And let's say that autonomous vehicles are worth 5% of that, just to pick a number. That means you got a $5 trillion opportunity in autonomous vehicles. Tesla's future valuation is roughly $630 billion, or about 13% of that total opportunity. Now, that's probably about right for right now, because it's a big challenge, but there is kind of one ace in the hole. Tesla has shown that when it innovates a technology, other car companies follow. So, for example, its charging protocols and its charging hardware, every other car company is beginning to adopt. So it does show that when Tesla develops something new, it can get other car companies to follow. And that's the critical thing. If Teslas can get to a truly autonomous driving where you don't need a driver at all, that opportunity is huge. And Tesla stock can be worth a whole lot more than today. If it can't come up with that technology and scale it, then Tesla is worth much, much less.
Granted that Cathie Wood and Nick Collis don't necessarily represent Wall Street's view on the future of Tesla's earnings, but even the big institutions do factor in the technological aspect of the company when determining their valuations. Because based on some of their price targets, it's obvious that Tesla is not viewed as just a car company. But what these clips do bring up is solving full self-driving, be it through artificial intelligence or otherwise, is what is the most important factor in fending off spillover of the UAW strikes against the Big Three. If Tesla can keep employees satisfied with their equity share, then the cost for labor and otherwise will be kept low. And after the next UAW contract, much lower than the average auto worker in this country. To ensure they're happy with their Tesla stock, Tesla must be seen as a growth name, not just heavy industry. And its work in full self-driving must materialize sooner rather than later to keep the unions at bay. The release of new models and expanding their total addressable market would realize short-term gains in the stock, yes, but compressed margins in a rate environment that is considered higher for longer would eventually retrace moves downwards that do not dramatically affect the profitability of the company unless by some chance the ramp of the Cybertruck and its new battery cells somehow equals that of, say, the Model 3 ramp in Giga Shanghai, which we all must admit is incredible. Tesla and unions. They aren't unknown to each other. Though they have no unionized employees, there actually have been attempts to organize at various facilities over the years. If you didn't know, Tesla has quite a few employees, sitting around 130,000 right now, with a possible 40,000 more once Cybertruck production is ramped up at Giga Texas. In comparison, the Big Three employ 146,000 workers across the country, so you can understand the union's great interest in Tesla being organized. In 2018, Tesla's Fremont factory was under threat of unionization, with employees contacting the UAW in attempts to campaign for organization. Since we know no employee unions have a contract with Tesla, the attempt was unsuccessful so far. But it sparked much public protest from Elon Musk, who tweeted out some memorable words, with one tweet reading, "Nothing stopping Tesla team at our car plant from voting union, could do so tomorrow if they wanted, but why pay union dues and give up stock options for nothing?" And the more memorable tweet, which said, "I'd like to hereby invite UAW to hold a union vote at their convenience. Tesla will do nothing to stop them." It's been a year and a half since that tweet. More recently, the Gigafactory in Buffalo, New York attempted to organize. It was February this year when the union drive started. The employees were part of that unionization effort, the organizing committee. They were fired within days. The same union pressure is felt in Germany, where Tesla has various companies in its Berlin Gigafactory, of course. Scrutiny is not coming just from the union, but from the local government as well. Tesla still remains without the collective bargaining agreement in Germany. I have no issue with the premise of protecting workers from conditions that are unsafe or ensuring employees are fairly compensated, but there are drawbacks to unionization, and not just for the company. Workers must pay dues to be part of the union, and there have been incidents in the past where those dues were not spent in the way one might think they should have been spent. Labor contracts could also prevent rewarding of exceptional work of employees, which would be instrumental in gaining and retaining talent that might be required to continue to innovate and grow. In turn, the benefits they might receive would compensate for any of the cons, yes, but being part of the union doesn't prevent Tesla from simply closing facilities and moving shop to a more employer-friendly state. The very Fremont factory that Tesla occupies has seen itself closed twice in the past, with two different owners because of attempts at unionization, or so the rumors say. Though closing a factory would greatly reduce volumes and profit in the short term, so the choice would likely have severe consequences to the stock. Should the UAW strikes be successful and Ford, GM, and Stellantis bow down to the demands set forth by Shawn Fain and company, the momentum could spell trouble for Tesla's facilities around the country, and at a minimum, it could force Tesla to reevaluate the compensation for their employees, if even just the base pay. Tesla won't be insulated from the strike despite what others say, but the damage can be minimized by focusing on the bottoming of the margin compression and getting full self-driving out as soon as possible. Share price must increase in the short term, and not just for shareholders' sake, but for the employees who do mental calculations as to what Tesla values their work at, their paycheck plus the growth of their stock options. If the equation to strikes was simple as strikes bad for the big three, good for Tesla, the market must not agree, because picking any time frame over the past couple weeks, Tesla stock doesn't outperform GM, Ford, or Stellantis in any meaningful way.
So I'll make it more complicated. It appears by my math that on average, Tesla employees who are non-unionized appears on an hourly basis may be making more money than unionized workers, for example, at GM.
You know, I'd have to see the information because it's not just the way.